Hi folks, this is Sean Hyman from Chart of the Day, and I want to talk to you about one way to know when huge moves are going to occur ahead of time. And that's the key, ahead of time. I love things that set things up ahead of time. There's not a lot of things out there that will tell you things that are going to happen ahead of time. Most of the time you have to follow what is happening, and you assume that what is happening is going to continue to happen, and then you manage your risk accordingly. That's what's called trend following. Because there really is no true trend forecasting, no more than I can tell you if I'm going to have an auto accident tomorrow, or what the markets are going to do tomorrow, or anything like that. I can't tell you what a trend is going to do tomorrow. I can only tell you what it has done, so therefore I know what it's likely to do, because trends are more likely to continue than they are to cease and turn around. And that's what a lot of trading is based off of, and then you manage your risk accordingly. So prudent risk management coupled with trend following is one of your best approaches out there. One of your worst approaches out there is counter trend trading. However, there is one thing that can let us know huge volatility is coming, and a huge move that we would want to hop on. And I want to jump down here to the chart. This is the pound yen 4-hour 40-day chart, and notice how pound yen started coiling up. Huge volatile spike, then a little less, then a little less volatile, 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 and it just coils up with lower highs and higher lows. And so it coils, less volatility, less volatility, less volatility. And if you didn't know about the pattern, you'd think boring, more boring, more boring, more boring. But actually, as it gets more progressed into the triangle, especially as it gets about 3/4 complete, you know that there's a huge breakout coming soon. Sometimes they'll come close to the end of the triangle. Sometimes they'll only come about 3/4 the way through before they break out. So when you start approaching that time period, that period in the triangle, in this symmetrical triangle, you know that it's only a number of candles away before a huge breakout occurs. Since these are 4-hour candles, then you know it's only so many 4-hour periods before before something happens. So it really rings a bell and gets you on alert for a move that's going to take place in the not so distant future. Could be 4 to 8 hours away. Could be maybe 24 to 48 hours. But you literally know in a pattern like this, there's an enormous likelihood that within the next 24 to 48 hours or less, sometimes much less, it's going to be a huge move. Well, if you know that that move is coming, you can prepare and get ready for it. And what you do in these symmetrical triangles is that you do not try to predict. You do just like the trend follower does. You don't try to predict. You follow what the price is doing. Now, so the price came out of the triangle to the downside, closed a 4-hour candle below it. So that's our cue to go short. And sometimes these will come back up to the triangle and possibly even a little bit into it, roll over and come down. And sometimes they'll do just like this one has, go straight down. So this one's already covered several hundred pips within the matter of the span of a few, 3 to 4 4-hour candles. So pretty nice volatile move, but it's got a lot more to go. Why do I say that? I say that because you can measure, you can get a minimum price target that this should move to either side when it breaks out by taking the distance from the top to the bottom of the pattern. In other words, it's the widest part of the pattern, and measuring how many pips that is. So we've got excuse me, we got about 142.03 here. We've got about 133.16 here. So we've got roughly 900 pips. So what you do is, from the point at which this breaks out, which is close to 138, a little under it, you would take it 900 pips down, and that would be your minimum price target. So that will keep you in the trade for a good long while, and it'll make it to where you'll seize a lot more pips than you normally would on a given trade. Also, some people target the bottom of the pattern, basically where this clusters around. So a lot of people, their first target would be around 133, for instance, as well. That's another way of using it. But personally, I tend to go off the price projection that this pattern has, which is taking this width and applying it at the point of breakout down, or at the breakout up had this broken upward. Now, occasionally there are false breakouts. That does happen. No pattern or any type of system is fail-safe. They will all have times where the market will do a little fake out. They're true to form more times than not, and that's what gives you your statistical edge on that. You'll normally have a high probability of more winners than losers. So you got a huge shot at that. And then so if you couple it with good risk management, then you've got a winning combination. So if this breaks out to the downside, we will want to place our stop. Let me see if I can get that here. Move this line down just to kind of represent it. So let's say, I'll move this one now so we can see where we would have gotten in. Okay, so this one closed a candle and opened right about in here. So let's say we would be in here, and our stop would be a little above the pattern to where it would have to trade through this pattern up a little in order to stop us out. Now, okay, let's say this is one of those head fakes, which it's not. It's come down way too far to be a head fake at this point, but let's say that it was. The pair comes down, fakes out, and then turns and busts through and heads up the other side. Okay, you know two things. One, if you get a head fake on one side, the likelihood of a breakout on the other side being true is very high. So while you didn't have a high probability trade there that came out, your next one likely is. And so what you do is, if this comes down, fakes out, comes back up here and hits your stop, let's say you're stopped here, remember that the pattern is basically the width, the price target rather, is basically the width of this pattern. So let me just kind of draw this out here for you. We'll color this, and I'm going to thicken it up so you can see it easier. So there we go. So there's your basic width. So if I were to take this and move this line up to the point where it breaks out, and I'm going to be conservative by putting it down here low, then the minimum price target for this on the upside would be over 147. Now if we got head faked and we got stopped out here, you know, you can more than make up this distance in this move here, because you basically got a 700 pip move here. No, excuse me, it's almost 900 because it goes past 147 because we measured it a while ago. So you've got almost 900 pips from the point of true breakout, and then you got head faked. Yeah, you got head faked for, you know, a couple hundred pips. Let's see, from 137 to, we'll call it a little under 140. So you got head faked for, let's say, 250, 275 pips, but on the other side of this pattern, you got, you know, 900 to the upside. Well, if you even made, you know, just, you know, half that run, you've more than covered your loss, and you've still come out with hundreds of pips. So again, that's one thing I like about this pattern when it goes right and even when it goes wrong. And this is a yen move that's done this recently. How do we know? I want to bring up the next chart, and we've got another yen pair, Aussie yen, on the 4-hour, 40-day chart, and it's produced a similar pattern. Also, here's another thing to keep in mind. This doesn't have to be this way, but if you see many of these yen pairs or other pairs that have a common denominator of another currency in common, and they form the same pattern, if you see one of them break down, then there's a huge chance that the others will break lower as well. It doesn't have to. Again, it can sing to its own tune and break out in its own direction, and you would want to follow the way that individual chart breaks out. But being that pound yen took the lead and broke out to the downside and is already way down here in its triangle pattern, we know that there's a huge likelihood that Aussie yen is going to pull back as well by the width of its pattern, and we can take that down here just like we did there. Again, if we got the fake out, we can take this projection and put it up here, get stopped out, flip our position, and still make money on that trade. Now there's one more, and again, this is how I know it's a yen move that's causing all this coiling, is because once again we've got Kiwi yen, or New Zealand yen as it's also known, 4-hour, 40-day chart, and it's coiling up here and has broken out to the downside as well. So this is how you know what's going to happen before it happens. I love this pattern, symmetrical triangle. It coils up, looks like a boring move, and then it breaks, and then you're going to have some exciting volatility come over the course of the next day or two, because remember, it's going to take some time to reach these targets, but a lot of that target will usually be reached in the day or two or three or so following. So you get this huge lead on your trade. And remember, as you get this huge run, like we saw in pound yen, take that stop then, move that stop to the other side just past break even, and then you've essentially got a riskless trade there as this thing goes on to target. And as it moves closer and closer to its target, move that stop about halfway between your break even and your and where the market is presently. That way it gives it plenty of wiggle room, but it also ensures more and more profit as the trade progresses. So I hope you've learned something today. This is a really exciting pattern that excites me a lot. And I love it because of its forecastability, so to speak, its predictability, that the low volatility begets high volatility. The directionless coiling begets a directional move, and we have a way that we can potentially win no matter which way it breaks, even if one of them is a head fake, as long as we manage the trade as I had shown you earlier. Thanks so much for watching. I appreciate it. Bye-bye.